Got a very special show for you guys today. Lior Gantz of Wealth Research Group. And we're here to talk about the 2018 trends and really have a mastermind meeting with you guys. So we're going to be addressing all the big topics that have come in at the Future Money Trends letter as well as Wealth Research Group, and basically discuss every single trend that's on your guys' mind. So let's get right into it. Lior, thanks for joining me at futuremoneytrends.com today.
Hey, thanks for having me.
All right, well, let's start off with the mother of all topics, which has been basically sucked all the air out of the room for the last 2 years, and that's Trump. And the big news, of course, is the Trump tax cuts. So let's start off with that. I'll hand the ball to you. What are your thoughts on the Trump tax cuts?
I think that if you look at the number, if you dive down and see what the tax cuts will do to the individual, you will see that they won't mean a lot to most Americans. And therefore, I think the tax cuts are a way for Trump to get political capital and a better approval rate. And you can see that already, that he has the approval rate of Obama at the end of year one. So his approval rate is really jumping, soaring right now. And I think he will use this political capital to facilitate the infrastructure plan, which is what he really wants in order to grow the economy. Because the massive stimulus is when the government creates genuine jobs, and the United States needs an infrastructure renaissance. It's listed so below the first world countries' standards in terms of their roads, their bridges, their everything. That this is genuine growth, a real growth, and therefore I think it's going to be very interesting to see what he does to exploit the tax cuts for corporations. Daniel, in my opinion, the tax cuts are going to have a significant effect because companies will have more profits to reinvest in machinery, in hiring, and in buying shares of their own stock, and perhaps even make acquisitions. So you're going to see the stock market in 2018 keeping on what it did, throughout this decade, which is rallying, and therefore, this top that we're expecting is probably a year away.
Yeah, no, I would agree that that the boom that we saw in 2017 with the stock market will continue. And anybody listening to this who lives in the United States, if you're in that middle class category, you're going to make an $1,200 to $2,400 over the year. Might not sound like a lot to, in the bigger picture, but look, if you got an extra $100 to $200 a month that's being able to go into the economy, that's a fairly large stimulus. But the real tax cut was with the corporations, and I know they have a bad rap, but people need to remember corporations are basically backed by 100% is people, and people somehow like to put corporations in some evil secret category. But ultimately, the more money a corporation has, the more it will either use to buy its own stock, which is fine, the more it will use to save, which that capital ultimately gets lent out, or it will use to expand the business or give pay raises, which we've seen a lot of companies already do. And people are like, oh, it's only 2% of their tax cut that they're spending to give raises. So what? What difference does it make? Whether it's 1% or 2%, it's more money that all those employees have. $1,000 bonuses, pay increases. I don't think those people are going to be complaining what percentage it is. And then you've got the repatriation, companies like Apple bringing billions, perhaps over $100 billion back in the United States, and paying tax, which will help fund government programs. So I'm pretty excited about the Trump tax cuts because I think it's going to just really lead to a new business environment that we haven't seen in this country since the 1980s. And Trump is also cutting regulations aggressively. He's cut more regulations than any other president in the first year. He's literally slashing them, and as opposed to the last administration, which was increasing them at an unprecedented level more than any other president. So the combination of cutting taxes and cutting regulations, I think Trump is doing a lot of good here for the U.S. economy.
I think another point before we move on is 2 points. One, Trump is doing what other presidents are not, and obviously I am not an American. I didn't vote in the elections, but I do have an outsider's look into how American presidents act on the political and economical front, and what we're seeing from him is something that previous presidents have not done. So the second you get elected, presidents have the tendency to say, hey, I'm not going to get impeached in the first year, that's for sure. So let me do all the hard stuff, all the bad, all the tough decisions, ones that seem bad for the population. Let me do them on year 1, and then on year 3 and 4, once I need to think about re-election, let me do the good stuff, so they remember me once elections come. And Trump is doing the opposite. He's going full throttle to everything that everything that plays into what the country needs to do, but he's also getting a lot of confidence from small business and from genuine middle class people. So you're seeing this new thing from him, and then the second thing, Danny, is I think millennials are hitting those peak earning years, and so they need credit available to them. They need a boom, and therefore the Fed is tightening in order to signal to people that want mortgages, like the millennials, if you don't take the mortgage out today, in 1 year that mortgage is going to have a higher interest rate. So they're trying to stimulate the economy in the reverse way from the last few years, where they basically stimulated corporations to borrow and not individuals. And so I think that's also going to affect inflation going forward in 2018.
Yeah, certainly inflation is coming back, and the Fed's finally going to get some of the inflation they were looking for, although we have had incredible inflation in the stock market and housing prices. All right, let's talk about China. That's another question people have had. There is this North Korean crisis, but outside of that, what are your thoughts on the Chinese, basically a credit boom, a resuming of the credit boom after 8 years?
Well, the big thing about China is that in order for them to grow, because their demographics are much different than the U.S., in order for them to grow, they need credit. And so they're a young country in terms of demographics, and they had a choice. They had a choice of closing their pockets and going through this austerity period, closing down debt levels, and making sure that the economy is more sound, but risking recession and risking a rebellion from the population there. And they said no. They said yes to a credit boom. So right now their middle class will grow. This means raw materials, this means infrastructure, this means real estate, this means a lot for precious metals. And China is, it's not only the second largest economy in the world anymore, it is running for first place, probably hitting it within 8 years. And so you're talking about the biggest economy in the world in 8 years opening the floodgates for credit. This has enormous implications on real assets, on commodities, because what they're building, and you and I have talked about this, and we've seen this firsthand. They're building mega cities of 50 million people, and they want to connect via roads and bridges and trains and everything. They want to connect Eurasia, and even Turkey is. They want to reach as far as Europe and interconnect it for trade and commerce with China. And so you're going to see copper and you're going to see zinc, and you're going to see aluminum, and all these raw materials rally. And I'm very excited about silver because it's also a precious metal, but also an industrial metal. So these are some of the things that I'm really watching for 2018.
You know, one thing everybody needs to think about when they think about China's middle class, here's a shocking number for you. China's middle class is bigger than the entire population of the U.S., which is 300 million people. Their middle class is 300 million people, over 300 million people. Now, by 2030, China will have 400 million people over the age of 65. So think about that. Going forward, they're in a perfect demographics situation right now, but they will enter that aging population just like the U.S. did 10 years ago. In 10 years, China will be there. But right now, they're in that sweet spot. They're in 1990s United States. Their population is in that 45 to 65. They're middle class. It's in a sweet spot right now. So their economy is going to be booming. And if you consider other middle classes like India and South America, and then take China, when these people go from being in rural farmland to being in the middle class to being in the city or suburbia, consider all the things that are added to their lives. Not only are they eating better food, they're starting to add more meat into their diet. They are starting to add computers. They've already got phones, but now they might have a smartphone. And now they're going to want a car. All of this stuff takes minerals. All of this stuff takes commodities. And that's why I think right now you could not be a commodity bull at a better time. It's at an all-time low for the cycle and with tremendous upside. Think of the demand for all these commodities, and the easy grade, the high grade stuff is pretty much behind us. So I think right now, anybody entering these commodity plays in 2018, I think you're going to make a fortune over the next 5 to 10 years from the rising middle class, the demand, and the fact that this stuff just isn't easy to find. One of the largest gold mines just shut down. It was mined for 107 years, and it's depleted. It's done. That gold is never coming back on the market. So it's a great time, and I could not think of a better time to buying commodities here in January 2018. I know nobody wants to hear that, but that's the truth.
And you know, what's important to understand is when the U.S. tried to stimulate between 2008 and 2016, 2017, they were trying to stimulate an economy where everyone already owns pretty much everything. So everyone's got a cell phone, everyone's got a car, everyone's got a home, a refrigerator, copper wiring for their, for their electricity, and it's an economy which is well developed, and so they were looking for this new resurgence, and it's coming with millennials, because the baby boomers are in a phase in their lives where they care about healthcare, but they don't care about new homes, new cars. They're not trying to make a fortune in the stock market. This is not the 80s and the 90s, like you said, and therefore the U.S. economy was very dependent on when millennials will start hitting peak earning years, which now they're doing that. Now they're in that situation. And in China, like you said, nobody has things. But what's important is to understand that China now, they want to build a new type of economy. So instead of enticing people to buy conventional cars fueled by oil, they're enticing people to buy electric vehicles. For example, electric vehicles need double the amount of copper, or they need lithium and cobalt, all these new strategic minerals, and therefore their growth period can really be double digits or the high single digits, not something that you can see in the U.S., which is like a 3.5% growth economy, even if it's really booming. So it's something to think about and look forward to.
Exactly. Yeah, and with the Federal Reserve is now in a tightening period. If you look at the last few tightening periods, economies have boomed. for 2 to 3 years into that. You know, a lot of people think that it immediately leads to a downturn for gold. But as you know, and you've done a lot of in-depth research reports at Wealth Research about this, gold thrives in rising rate environments. In fact, the last time it had the most epic bull run gold ever had, from $35 to $850, it was in the most aggressive rate hike tightening period we've ever experienced in the United States. So with the Fed raising rates, and in December 2015, that essentially marked the bottom for gold. A lot of people don't realize that, but gold's now had 2 consecutive years up. It's up a tremendous amount just in the last week here. In fact, as we do this discussion, it's having its biggest run since 2011. And that is in an environment where everybody's expecting the Federal Reserve to raise rates. You know, if I've learned anything as an investor, what everybody's thinking is going to happen, it's always the opposite that happens. And part of that is because what everybody thinks is going to happen is already priced in. So by the time that event happens, the opposite happens because it's already been priced in. So what are some of the moves you're looking at for entering a tightening period in the Federal Reserve over the next few years?
Well, the biggest thing that's on my radar is the synthetic interest rates. So you've got the Treasury with what it's yielding, or you know, the yield on the safe haven for the big institutions is the 5-year bond and the 10-year bond. And when synthetic interest rates, which is not what the United States government is willing to pay you, but what the Fed fund rate is, when that synthetic interest rate surpasses the 5-year and the 10-year yields, the economy goes into recession. That has happened every time the Fed has tightened. And so this is the one thing I'm keeping an eye on most. And it looks like this has about a year to go until they reach that point. And so the recession is probably going to hit around 2019. And there's a few other things that the Fed can mismanage and even make this period worse. And so 2018 is, in my opinion, the last year in this decade that you can really juice major profits from the stock market before it turns. Now, when the stock market turns, investors need to hedge, and the most effective hedging is with commodities because they're unrelated to the tech companies or to the biotech companies that lead the U.S. Equities market. And so this this tightening period is very favorable for commodities. And again, the reason this is happening is because when the Fed tightens, it signals to businesses, you can hire. We're tightening. We're going back to normal. We're going to shrink our balance sheet. Everything is good with the economy. We don't want to overheat it. And therefore, businesses see this, institutions see this, funds see this, and it does get overheated. The Fed's balance sheet is right now 23% of U.S. GDP. That's a lot. It's normally 6%. So they need to really shrink their balance sheet while the rest of the economy grows. Otherwise, we hit recession. And so there's a storm going on here. And I think the bottom line is the Fed mostly mismanages these cycles in history. You've seen it every time they tighten, and therefore people are going into gold because there's uncertainty right now.
Yeah, I think, one thing that people don't realize is that, especially the mainstream, this entire economy is really being held up on air. Not only who knows what the dark accounts at the Federal Reserve are buying in stock, but buybacks, and which is fine. But, with the Federal Reserve's balance sheet and all the bad debt and toxic assets that they have, if this was actually to unwind, we would have had an extreme deflationary event. Now, the sad thing is if that would be like 5 years behind us by now. We'd actually probably be in a very sustainable economy if they would have allowed the economy to correct and get rid of all these imbalances, but they didn't. So here we are. But one thing I think that people are not factoring in, and it's a little disagreement with you on 2019 and 2020, Lior, but I really believe that the U.S. economy, so most people mark the end of the recession in 2009, and they'll tell you we've been in a 7-year bull market or a 7-year growth period for the United States. But if you actually look at the real data from Shadow Stats and just use more realistic accounting, the U.S. really had been in a 7-8 year recession going into probably 2016. And 2016, it was barely coming out of its real recession. So as shocking as this is going to sound coming out of my mouth, because I'm a bear, a dollar bear and a stock market bear for the bigger picture, just because I do see a lot of fraud supporting it. I think this bull market could take the Dow at least to 50,000, and I think the U.S. GDP, once it hits 4% in this first or second quarter of 2018, I think people don't realize that if you factor in if you think the recession ended in 2009, it looks like the market's been going, for almost 10 years now. But really, the recession didn't really end. The gloom in the United States didn't end until 2016, maybe even 2017. So this is a very, very early stage boom in the U.S. And so we'll see what happens. And, factor in all the things that is happening with government. Government's getting out of the way. Business environment is very optimistic. Consumers are optimistic. That's the wealth effect. That's textbook. So I think this could go into the 2020s. And another thing that people need to factor in is that the millennials also and the Gen Xers, which are basically the echo boomers. So there was the baby boomers, who peaked in their spending habits, which is age 45 to 55 in the 1990s to 2005. The millennials, they won't even hit that period for another 10 years. But as you said, they're starting to increase their pay. They're starting to enter those better careers now in their young 30s. The Gen Xers are already in that phase. They're already entering that phase. So the tip of the iceberg. So you go into the early 2020s, specifically starting at 2022, that's when the echo boomers or millennials start to literally hit 45 years old. The first ones start hitting that age. And when that happens, you got to consider they've got older kids. They're now buying more expensive things. So I honestly think that it's possible, assuming the Fed doesn't mismanage it like you said, though they always do. The United States could be looking at a nice boom here, because we're coming out of a very prolonged underperforming economy, and we're also entering some very healthy demographics, but we need to get there first. We're only in 2018. The really healthy demographics for the U.S. don't really start until 2022. So there's 4 years, but if we can get there, we're looking at like 1992 when the baby boomers started hitting their peak spending habits.
And, for this decade, one of the biggest sectors, one of the biggest industries is going to be in hypergrowth, is going to be electric vehicles. In the U.S. and abroad, you've seen many of these governments put even a cap on how much they want the electric cars on the road. China for pollution reasons, India for their own reasons, the U.S. for their reasons. The underlying theme is that a commodities super cycle, like the one we experienced from 2000 to 2008, could be reigniting, and that's exactly the point that you're making. And we talked about this off the air, but the smartest company in mining, Wheaton Precious Metals. This is a $10 billion behemoth that every mining tycoon will tell you is one of the best businesses, bar none, in the world. They just took an equity position, and you and I talked about this, and not only an equity position, but they loaned a tremendous amount of money to a small, tiny, small cap company. And the company's Cucho Copper is like we discussed before our mastermind discussion, because this company is one of the fastest growing companies for copper and zinc in the world. They're newly listed, only 2 weeks, and I wrote an extensive report on them at wealthresearchgroup.com/inflation, because I think for inflation purposes, copper is the #1 metal to look at.
Yeah, no, copper is having quite a run here too, by the way. I don't know what it's doing today, but it broke a record for how many consecutive days it had risen going into the new year. So, yeah, copper, zinc, cobalt, a lot of these metals you mentioned, they have a lot of upside. All right, well, let's talk about what everybody's the mania of the last quarter of 2017 was cryptocurrencies. Let's kind of do a little bit of a recap on what happened, as well as what we're thinking for 2019. I'll let you lead us off, Lior.
Sure. Look, the big thing here is the Q4 of 2017 is very similar to what we saw in the Nasdaq in the late 90s. So, the way I see it, cryptocurrencies, all of these projects, you should look at them like startup companies. It doesn't matter if they're decentralized, if they have this governance system, or if they're more tightly held like a regular conventional company. The idea behind them is they're all in this trial phase, this period where you're going to see if their use case, if the problem that they aim to solve is really there, if there's a real market for them, and how sustainable is it. But that discovery period of whether or not the project is valid and whether or not the project is sustainable, that is fueling a lot of speculation. People are just dabbling in all types of cryptocurrencies, not just Bitcoin, but many of these altcoins as well, with the premise that some of them will be the next Microsoft or the next Cisco or the next Qualcomm or Oracle, because the Nasdaq rally did not end with a crisis that wiped away every company on the planet that was involved in the internet. The internet is still here. It's still around. It's a viable part of the marketplace, and the same thing will happen with cryptocurrencies. And so the important thing is to realize that they are like startup companies, the way we see them at Wealth Research Group. And this year we highlighted Bitcoin and Ethereum at $12, Monero very early on, Dash at $30. It's over 1,000. Steam, and lately in the last 3 weeks we alerted on Ripple at 27 cents, and it went up 1,000% in 3 weeks. So it's been a big year, and I think 2018 brings on regulations. Regulations are important for and institutional money, and I think that is something that will bring a lot of assurance and reassurance to bigger players, and that is important for this entire sector. The one thing that is pretty substantial, and I'd like to know what you think about this, is the fact that central banks now might start buying cryptocurrencies because they see that their market cap is rivaling the market cap of their foreign holdings of fiat currency. So, for example, the Swiss central bank can own billions in euros, but now it can own billions in Bitcoin, for example, and not move the Bitcoin market that much. So they can make moves to own more cryptocurrencies and diversify their own portfolios as well.
Yeah, no, I think it's an exciting sector, and I think that, look, the hard part is now behind Bitcoin. I remember profiling Bitcoin at $13. It was a speculative bet. I bought some Bitcoin as high as 800, and I got it confiscated on some Russian exchange. And Bitcoin had Mt. Gox, and now it's had some, all these fake articles and scares with China or Korea. and then it started becoming used as a currency in a place like Argentina and Venezuela and Zimbabwe. And I think the messy part of a new currency and a new technology is still there, but I think we're definitely the worst is behind us with the CME adopting. I know a lot of people don't like that. You know, we want to keep it free market, but it is going more mainstream. Institutions are getting involved in it. Ethereum is one of our top picks, along with you, Bitcoin, as well as Litecoin. And you know, I look at this sector and I see a lot of mania. And I'll just give you a perfect example. When Bitcoin hit 19,000, and I should have publicly called it on this one, my housekeeper was asking me about it, and I was like, that's not a good sign. And you know, sure enough, it pretty much blew off at 20,000, and you know, it's been, you know, struggling to find a floor right now. But look, it wouldn't matter even if it went back down to 3,000, 4,000, 5,000. Bitcoin is here to stay, and with the new Lightning protocols being implemented, it's going to get back to its core. It's back to its true purpose, which was that peer-to-peer payment without a central bank involved. But I think the real money for Wealth Research Group readers, as well as Future Money Trends readers, is with these companies. And as you know, you and I are traveling around the world along with our teams to find the right companies. And Hive blockchain being the top one that we discovered, one of the biggest winners of 2017. And it's the most legitimate company. A lot of people email me and say, hey, how come Hive's not going up with Ethereum, or how come Hive's down today? There's a lot of things going on. This company has raised $200 million since inception, and it just started trading September 18th. So I think Hive, in my opinion, is going to be a multi-billion-dollar company, then a $10 billion company, and ultimately probably $15 to $20 billion company and higher, because they're mining virgin coins. It's a term Frank Holmes introduced the world to. These are new coins, and a lot of these other blockchain deals are going to have a lot of heat from regulators, because you don't know where that Bitcoin was the last transaction when they're trading it. But you do know where the virgin coin came from, because it's new. It's never been used. And I think that if anybody positions themselves in Hive blockchain technology, which trades under HIVE, you can also read our report, futuremoneytrends.com/blockchain. I think that is going to become one of the go-to stocks for institutional investors, and it may already have turned that corner by the very fact that it's raised $200 million. You gotta remember, these other blockchain deals are running around, you know, they're bragging that they've raised $3 million or $5 million. Hive has raised $200 million. It's backed by a few billion-dollar investors. So very exciting time to be in the crypto space. 2018, expect more new picks for the blockchain technology. But I would tell everybody, just be cautious. Don't get caught up into the hype. If you've got profits in the cryptocurrencies, I would take big profits right now, and prepare to position yourself in the companies, because ultimately Bitcoin and a few of the other core currencies, they're going to be around, but most of these altcoins are going to go away. I saw it in 2013, 2012. There was like 1,000 of them, and then 90% of them went away. And now we're seeing the same thing. Now there's like 2,000 altcoins. And I guarantee you, within 12 months, within a year and a half, most of them will be gone or useless.
You know, the other thing that's important to understand about the blockchain companies, the stocks, is that you don't have a liquidity problem with them. For example, with some of the exchanges, they're backlogged right now, and you can't make serious money even if the coin that you want to position in is really undervalued. They might only allow you to get in for $100 or $200, even if it might take you 2-3 days to get verified for a new account. So there's a lot of problems when you want to make a serious amount of money, and you know, investors that are looking to position themselves, they're not looking to position with $200 or $300. That's not the bulk of the investing community, and that therefore there's a lot of importance for liquid blockchain companies to get listed on the stock market because they offer this vehicle, this bridge between the cryptocurrencies and a higher level investor. And Wealth Research Group is going to publish on January 6th our top 5 cryptocurrencies for 2018. And so you can go to wealthresearchgroup.com/top 5, top and the number 5, and get that report so you can understand the type of coins that we believe will solve the best use cases for 2018. And that's something that we're working on. And like you said, and we're both heavily attending conferences right now to find new opportunities, because this sector has 2 to 3 years of exciting speculative gains in it.
I want to move on to what I believe is going to be the blockchain of 2018, and that's cannabis. And of course, it's making big news with both California and Canada legalization this year. Canada in about 6 months, 7 months, and then California just started in the new year. Okay, so cannabis is one of the things I think is going to be the biggest trend of the year. It's already playing out. I think we're going to be able to get some huge gains. We're definitely looking at 10 baggers in my opinion. We already had one. Both Wealth Research and Future Money Trends profiled lifestyle delivery systems, which is under the symbol LDS, and we've both put not sell alerts, but no longer accumulate. I think you put a sell alert. I just basically told everybody it's way over our buy up to. We profiled it between 50 cents all the way down to 39 cents. Today it's trading for about $1.50. Huge gain in California, but cannabis plays coming from Wealth Research Group and FutureMoneyTrends.com. And I know of these companies. Now, most of them are not even public right now, but I'm telling you, if you're listening to this show, holy mackerel, we have the most legitimate, most exciting cannabis companies, from a royalty streaming deal to the companies that are of the handful of licensed producers in Canada and California. So expect big news from us this year. I think we're going to position everybody who reads Wealth Research and Future Money Trends like no one else. Future Money Trends put us a brief alert on Fincana Capital Corp this morning. They're a royalty deal in California. You can't really buy it if you're an American right now. You can buy it if you're Canadian under the symbol Cali. But you'll hear more about that one this year. But then we've got some new picks that are not even public yet. Wait until you guys read these. You guys are going to be so thrilled. These are the best, the most legitimate companies in the entire space you're gonna get. Now, you're gonna hear a lot of news and a lot of bubbles, but I'm telling you, we're gonna partner with the best, and we're gonna make real money from this cannabis boom, which will last for at least a decade. I mean, we're in such an early phase, so messy. The only people really making money right now are the attorneys. So just be patient. You're going to get the best picks. Lior, how are your feelings on cannabis as well?
I think one of the most important things to keep in mind is that now that it's legalized, the competition is going to be fierce. You're going to see a lot of legitimate people coming into the space that didn't want to get involved when it was messy. Like I said, California is going to be like the breeding ground and the laboratory, the experiment for all other countries and states in the United States to see how a huge market behaves in a fully legalized environment. And so you're going to see a business environment which is very, very favorable and is going to punish companies that are mediocre. And I think the people that do not do a thorough due diligence on the companies that they want to get involved with will see that the speculative era that was between 2014 and 2017 is not going to be there for them this year. The market will punish mediocre companies and it will reward the best companies. That's why we put in months of work to make sure that we only get positioned as investors with the best business models for 2018. Canada is still in that 7-month period of speculative gains because they're not yet legalized, and you're going to see a lot of great gains there. And then you got the California market, and I'm headed there right now because you got to check out what's going on the ground over there, and it's really important for people to understand. And you're right in what you're saying. Cannabis will rival cryptocurrency's gains of 2017 because these companies start from scratch, and then they got a legalized market to sell into. So the market is already there. With cryptocurrencies, this was a newly launched industry. You don't know if there's going to be demand for what you're creating. Cannabis is as big as booze. It's as big as alcohol. And from the medical perspective, legalizing it gives it so much legitimacy for research and development companies to find new solutions for it. So you're gonna see medical expansion, and I'm very excited about that.
Lior, a couple other questions on our list here is there going to be a stock market crash, retirement, and then I really want to get into setting some goals. I know we're running low on time, so why don't we briefly cover the possibility of a stock market crash this year, and then get right into setting realistic goals. So first off, is there going to be a stock market crash this year? I think Lior just wrote a great report on that, which I'm sure he can share with us. But I've kind of stated, look, I acknowledge that the stock market has a lot of air in it. But I think you're going to see GDP print at 4% within the next 3 months to maybe 6 months at the most. And when that happens, that's being priced in. I think Dow's going past $30,000 this year. In my opinion, I do not think you're going to see a stock market crash. And again, there's a lot of backfilling that needs to be done because the stock market rose on fraudulent reasons, fake economic numbers, in my opinion, for the last, 10, 15 years. So even if we do have a robust and growing economy and a real meaningful change in the U.S. business environment, which we are seeing, you have to backfill that just like anything else. So who knows? Maybe this thing runs a lot higher than any of us can think, but I don't foresee a crash happening, at least not in 2018. The environment is just not there. People are very consumer confidence is at a high. The business environment is definitely changing. So I think that we're in good shape, and we won't have a crash. But with that being said, I mean, look, none of us can predict what the Federal Reserve is going to do. None of us can predict what North Korea is going to do. So, either way, as we often really advocate in Future Money Trends, you shouldn't be, if you're involved in the stock market so much so that you're worried about a crash, you shouldn't be involved in stocks because it shouldn't affect you. When the housing market crashed, it did not destroy my life when I was involved in rental properties because I just kept collecting on the cash flow. And, you should be truly diversified outside of the stock market with a lot of these fintech companies like PeerStreet.com or Fundrise. You should have some rental properties. You should have some stocks. You should have some of these speculative companies that we partner with. But look, a stock market crash, if it happens, it happens. But the main mindset I would like everybody to leave you with is that the important thing is a stock market crash shouldn't mean anything to you. The only thing it should mean is maybe you can buy Disney cheaper and a great company like Costco at a cheaper price. But outside of that, if the stock market crash is going to affect your life, I suggest you sell stocks right now at an all-time high.
I think, Dan, on my end, what's important to understand is I do not think that the stock market will top off in 2018, but the chance of a 5 to 10% correction is very likely, and therefore I did write a special report about how to prepare for such a correction, how to anticipate it, and how to enjoy the aftermath. Because in 2016, if you remember, an 11% decline in the S&P 500 fueled the hedging into junior mining stocks and created this 8-month boom with gold and silver stocks, and other commodities flourished as well. So at wealthresearchgroup.com/crash, and it's basically a manual on how to get prepared and see the technical side of this. For the stock market, the only thing that is worth watching is if the bond yields from the treasuries meet the dividend yields of the S&P 500. Because if that happens for the 2-year bond, then lots of institutions and pension funds will move from stocks to treasury bonds, and that might create this correction. So that's where I leave you with that.
All right, let's get into setting realistic goals. It is the start of the new year. Both of you and I, since we were children, have been great goal setters, and we've crossed paths on a lot of the same books. Even though we didn't meet till we were adults, there was a lot of common denominators. So one of the biggest things, of course, that you pound the table with is just setting realistic goals. Lior, if you want to talk about goal setting, and then I'll close this out with some goal setting as well.
Sure, why not? I think first of all, it's for me, setting goals is so fundamental to my life that it's kind of hard to imagine life without goals. And therefore, if you're listening to this interview, just ask yourself, right now, what are my top 2 goals? And if you cannot say your top 2 goals out loud easily, then you really are not focused on 2 things that you need to be truly focused on. So when I get up and when I go to bed, my next 2 goals are always on my mind, and my entire day revolves around them, and it makes me very focused and very obsessive about them, and it fuels balance in my life, because I know that I need to create a day that revolves around them, around achieving them, and at the same time, I need to make sure that my other priorities for the day are also filled. The reason I say that is because that eliminates wasting time. If I know that I want to spend time with my family and spend time with friends and spend time doing outdoor activities and still reach my 2 financial goals, that means that when I am focused on them, I'm laser focused on them. And that is something that I think you and I both share, is that a consideration of time and how valuable it is to not waste it. And so I sacrifice a lot to make sure that I have time for the important things. In other words, I limit my time for entertainment, like TV and Netflix, etc., to about 1 hour a week. So that's all I devote to that. I want to spend time doing other things, and it's very important to understand that laser focused mentality. Now, with setting goals, my method is to first of all write down all the things that I'm grateful for. I don't know if that's something that you do as well, but that's the first thing I want to do, because if I know what I'm grateful for, then I know what I need to move on to next. So that's my first important thing. I don't know if that's something that you share with me or not.
We're huge on appreciation at our house. As you know, every time we have a meal, we go around the table, we talk about what we're thankful for. Anytime I get stressed out, which is very rare, to be honest with you, but let's say on those few occasions, I will just pause and start thinking about what I'm grateful for. I've even read in Tony Robbins' book that he actually starts his day with 10 minutes of just focusing on what you're appreciative for. When it comes to setting realistic goals, everyone, first off, I suggest you write down your goals, tape them up on your bathroom window, tape them up in front of your desk, wherever you spend a lot of time, or you're guaranteed to see it every single day. Just make sure that you're reading them out loud to yourself. Part of that is your subconscious and your mindset. You want to make sure that you're focused. I love that word, Lior. When they asked Bill Gates and Warren Buffett in separate interviews, to describe their success in one word, and they both came out with the word focus. And I've talked to Keith Newmeyer about that a lot, and he says, I like focus. Focus, the difference between successful people and people who are not successful or fail at trying to achieve their goals is just those people stop. If you're focused and you just don't stop, I really believe that part of being successful is just not stopping. So if you're focused on that goal and you're seeing it every day, and every day you're working towards it, you will achieve it. You absolutely will if you just don't stop. But you have to be, like Lior was just describing, very, very focused, and every day you're working towards it. So set realistic goals, decide who you want to be, decide where you want to be, where you want your business or your employment, where you want your investment portfolio. And I'm not talking about just putting a number like, oh, I want to be worth $10 million. You have to, a goal cannot just be a dream. It has to be an articulate objective. So reverse engineer that. If you want $10 million, reverse engineer it over the next week. How do you get to that number? Structure it. How do you get to that number? Be realistic. Maybe it's going to take 5 years. Maybe it's going to take 7 years. But structure it. How do you get there? And then you start working towards those goals every year. You start writing, get some goals where you can start crossing things off. But yes, focus and designing your life's plan, and be flexible, because things are always going to be changing, and things will, hopefully for the better, some new opportunities.
The second thing that's important for me when setting up my realistic goals is to make sure that I'm accountable for achieving them. So I tell them to my wife, therefore she knows what the family is looking forward to. If you have them, if you're accountable for them, it almost makes you work harder, because now you've shared them and you don't want to fail. I don't know if that's a psychological trick that I play, but when I tell other people that I'm looking to do this or looking to do that, it's important, because then they also know that I'm looking forward to achieving that goal. And if they have something to contribute or a way to mentor, then they do that. And therefore I share my physical goals with my trainer, and I share my business goals with my partners and my mentors, etc. And that's something that is super important. The need and the importance of people who have done what you're trying to do in your life. And so if that's something that I can leave you with, find one person who has already done what you're doing and provide enough value to their lives so they want to invite you in and mentor you. Because most people think that seeking out a mentor is about finding someone who has all the time in the world to coach you, and that's not true. When I started looking for mentors when I was 16, the first year that I was looking for one, I had to call 50 people, and it took me 50 phone calls to get a one to say yes. And the reason he said yes was because I told him I'll work for free for 6 months to learn what he has to offer to me, and that's how I got accepted into his inner circle. Now that man changed my life back then, and that's something that I've used since then. I try to connect myself to the best people by providing value to them, whichever way I can. If you're really focused on achieving your goals, you will do something that is out of the ordinary. You will push the envelope of what you think is possible right now, in terms of how you're willing to structure your life, and you will do that. And while doing that, take on proportions and make sure that you accept failure, or what I like to call temporary defeat, in the right way, and learn from it, and then be resilient and adapt to it.
Absolutely. I would recommend everybody rewind it 2 minutes and listen to that. That's great advice. Providing value and over delivering and partnering with the right people. It's the core of the Future Money Trends letter and wealth research. Again, everybody, thank you for joining us at futuremoneytrends.com. Also, check out Lior Gantz at wealthresearchgroup.com. You guys have a blessed and happy new year.